10-year note yields open higher, get all the way up to 457 before reversing and moving lower, getting down to 455 just ahead of the January FOMC minutes. Once they were released, we saw yields continue to move lower. In fact, got all the way down to just below 453 where they closed out the session, down a couple of basis points from yesterday's close. Now, what did those FOMC minutes reveal? Well, ultimately, that the Fed's going to wait, and before they change policy again, they're going to wait and see if inflation continues to come down. They're also talked about being a little bit more concerned about inflation than they are, say, about a weaker economy. They also added that they are talking about either pausing or slowing the current balance sheet runoff that's been in place for quite some time. So ultimately, that is what pushed yields lower, and we'll have to wait and see what happens in the aftermath of those minutes. But clearly, yields moving down after trading 457 early in the morning, closed out below 453 on the day, down about 2 basis points. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you will see the volatility was higher today. In fact, it's been higher over the last 3 consecutive sessions. That's after falling for about a week straight. And then we've come into this week after the Fed chair spoke last week, after we got inflation data. Then we see this week, we see volatility firming up off those lows, and that continued again today. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims number. We also get the Philly Fed index. We get a 30-year TIPS auction, as well as more Fed speakers.